the Chinese securities markets have surged a little bit overnight as there are rumors of a $300 billion stimulus package for the Chinese securities markets. Now, as an Alibaba shareholder, when I first read this, I was like, okay, but I'm largely skeptical on this because there are still underlying issues on the economy that seem to not be resolved yet. And so that's what I'm going to break down in this video for you guys. And so as you smash that like button, let me run that intro. So you can see that Alibaba and other China stocks rebounded on stimulus report and tech rule moves. So what exactly were those two items? Well, the first item is, of course, any sort of government support of buying up securities is obviously going to boost the stock market. And then there was something else that you guys may have missed because it came out late in December, I think December 22nd, which was some tech rules like anti-video game maker rules that impacted the securities of video makers like Tencent or video game developers like Tencent. And so I'll go into both of those for you guys. And so starting with the first one, Bloomberg reported citing anonymous sources. So I always caution you guys whenever there's anonymous sources that it could be BS. And either way, I'm calling BS on this because even if this does happen, I don't see sustainability for the securities prices. And so, their anonymous sources say that the Chinese government plans to mobilize 2 trillion yuan or almost 300 billion from offshore accounts of state-owned enterprises to buy shares in Hong Kong, as well as using 300 billion yuan of local funds to invest in onshore shares, the report said. So is this around almost $600 billion of stimulus? So fair enough. So I guess almost 4 trillion yuan of stimulus. It seems like, guys, correct me in the comments if I got that wrong. And that at first glance seems pretty interesting. You got 600 billion yuan of capital being used to buy up these securities to increase their prices. But once again, I tend to be a little bit more skeptical on this stuff. I focus on the stories. And of course, you guys know that there is some real risks here, right? A global economic slowdown will slow down the factory of the world. I say that over and over again. And the reason why I do is because there are real issues here. Also, the property market is in a situation where it seems like there's reports of people just waiting right now to buy because they're waiting for the prices to come down. This isn't even an interest rate issue. I think even if China lowered their interest rates like what was being expected yesterday or the day before, I don't think that would stimulate as much demand for the real estate market as they were looking for. So there are some real sustainable issues, or not sustainable, but there are some real issues that need to be dealt with before you just throw money at the securities markets. And so that's why I look at this with a little bit of professional skepticism, I would say. I'm not as excited as you're seeing other people on YouTube are at the moment. And so you may have missed that tech issue, and so I'll just bring it up here. So China actually looks to be scrapping the proposed regulation of cracking down on video game developers with the rule that was sort of floated in late December. And so you can be forgiven if you missed it because this came out during the holidays. We were all off work, and this is what it was. China's National Press and Publication Administration proposed a ban on rewarding users for spending on online games, as well as a prohibition on rewarding players for logging into games daily, which is a common mechanism used by video game publishers to incentivize repetitive play. And so because of this, NetEase's shares were down 19% and Tencent's securities were down 13%. Now, I'm not saying that the rules are good or bad, but anything which incentivizes people to play less video games is of course going to hurt the video game developers. And I think someone at the Chinese regulator actually ended up losing their jobs because of this proposed announcement. Now, just going back to the stimulus efforts, you can see that this was published in Bloomberg, and notice that they did say that Bloomberg is generally perpetually bearish on the Chinese market, but they do make a good point here where a lot of the efforts have proven fruitless for the Chinese securities markets as a whole. And you can see all of the things that have been done. And I don't disagree because ultimately there are some real issues that you have to work through. I sound like a broken record when I say that, but this is what I mean, where I'm very skeptical of just throwing money at the securities markets and having it sustainably keep the markets high. And for the old guys, you can see that they actually tried to do this in 2015 as well. So they threw 1.5 trillion yuan into buying securities. Obviously, this time it's higher than that, and so you might get a larger bump. But notice what happened. The securities continued to go down. So, you can look at this almost as like the starting of a bear market rally, so to speak. And that's actually what was said later on in the article, which they summarized very well here, which is that throwing money at the market, as Beijing Beijing appears to be willing to do while economic woes lie unresolved, will only embolden traders to sell into what may be at best a bear market rally. The rally is not necessarily sustainable unless we have a bigger stimulus package to address the economic issues. Now, here's the thing, though. If this results with the security markets actually going lower, there are some securities which actually are very interesting, because I do personally believe that logic is being thrown out the window with these securities. And so you have some Chinese securities that are trading under net cash. For example, I think somebody wrote in one of my comments that JD.com right now is trading under cash. Their market cap is lower than the cash on the balance sheet. And so that's something I have to investigate and update in terms of the model on the tracker. But, if Alibaba starts trading lower, it goes into the 60, like the low 60s, even the high 50s, even the mid 50s, like if it continues to come down, there's a certain point where it just becomes an insane proposition to not purchase the securities. And so, I tend to still be a bull on specific Chinese securities like an Alibaba, like a Tencent. And so I'm looking at this opportunity as, look, if this thing rallies and then comes back down when the stimulus wears off, these become other buying opportunities. But, if you've been purchasing over the last few days and you get that rally, this might be an opportunity to take some profits as well. So once again, this is never any advice, but this is interesting times, and it's very, I'm very interested to see what happens over the next 2, 3, 4 months with respect to this whole situation here. And I spoke about Alibaba and Tencent. You can see that I'm valuing Alibaba at around $200 per share, where the share price right now, or at least it finished over the weekend at $69 per share. And then, of course, and that means it's trading at around 34% of its intrinsic value. And then Tencent, I believe, is trading around 60% of its intrinsic value. That will move today, and the tracker will automatically update. Of course, I've hidden the other securities because that is available to people that are a part of the Patreon. And once again, to get access to all of my research is just at this low $5 a month tier. And once again, if you subscribe and you don't find any value, just let me know and I'll completely refund your money, because I'm not looking to take any money from anybody who doesn't gain any value. And then the other tier, if you really want to step it up, is we have a monthly live call. We have special live courses, and I have a comp schedule which compares the KPIs of some of the major regional banks. And I'm going to be adding other types of comps into there, like dividend payers and such. Also, there's a third tier eventually coming, mostly just because of demand from the Patreons, and that's going to be more of like a let's model together type of tier. And so it'll be limited to around 25 people, where once a month we'll get together and we'll model companies together, which we will know ahead of time. And so it really becomes a fantastic learning environment to learn how to model securities and special types of situations. And so the more and more you do it, the better you get at it. The only reason why I ended up getting somewhat okay at financial statement modeling is because when I worked in equity research, we just modeled so many different companies and walked through so many different situations that I became comfortable with it. And so that's what the objective of that tier is. But I didn't want to make it super expensive for anybody. I didn't want to charge people like $2,000 or whatever. And so I came up with a structure that's affordable, but it also provides you with all the value. And so stay tuned for that. That will be coming out soon. And so I'll leave it there for you guys. Let me know in the comments below what you think about the China stimulus, and I'll see you guys later.